Hey, in this walkthrough, I'm going to record our very first governance action, DFR1, into the DAO's accounting ledger. This already happened on-chain. The DAO voted, and the Treasury sent out 600,000 DFR in 2 transfers. My job now is to make those movements legible, so any member, today or 2 years from now, can open the books and understand exactly what moved and why. Here's the core idea before we touch anything. Moving tokens between 2 places the DAO controls is not spending money. It's just reshelving. The DAO still owns every one of those tokens. They're just sitting somewhere new. So we're going to record these as internal transfers, not expenses. First, I need somewhere to put the tokens. Right now, the ledger has a Treasury account for DFR. That's account 1020, but it doesn't have an account for our community growth safe. So let me create one. I'll give it the code 1040. Name, Community Growth Safe, DFR. The type is asset, because this is still the DAO's money. It's a place we hold value. Subtype, current asset. Parent account, the 1000 assets header. And this next part is important. The denomination is DFR, not US dollars. That tells the ledger to show this balance in tokens, 500,000 DFR, instead of trying to convert it to a dollar figure. Safe. Now, the same thing for the LP wallet, the wallet that's going to seed our trading pool. Code 1050, name, LP wallet, DFR, type, asset, subtype, current asset, parent, assets, denomination, DFR again. Safe. So now I've got 2 new, clearly labeled buckets, ready to receive the tokens. Now let's record the actual movements. First transfer, 500,000 DFR from the Treasury to the growth safe. For the type, I'll choose adjustment, because this is an internal reclassification. We're not earning revenue and we're not spending on anything. We're just moving our own tokens. Description, DFR1 transfer 1. Treasury to Community Growth Safe. Now for the double entry. I debit the Growth Safe account, 1040, for 500,000 because it's receiving the tokens. And I credit the Treasury account, 1020, for 500,000 because it's sending them. Debits equal credits, so it's balanced. Save. And here's the part that makes this trustworthy. I'm pasting in the proposal ID and the transaction hash from the on-chain execution. Now this ledger entry is permanently linked to the real blockchain action. Anyone can verify it. Second transfer, 100,000 DFR from the Treasury to the LP wallet, the token side of our future DFR USDC pool. Type, adjustment again. Same date. Description, DFR1 transfer 2, Treasury to LP wallet, pending DFR USDC pool. Same proposal ID, same TX hash. Debit the LP wallet account, 1050 for 100,000. Credit the Treasury, 1020 for 100,000. Balanced? Save. And that's it. Look at the result. The Treasury now shows 9,300,000 DFR. The growth safe shows 500,000. The LP wallet shows 100,000. Add those up, and it's still 9.9 million, exactly what the DAO controlled before. Nothing was spent. It was just organized into clearly labeled buckets. One thing I deliberately did not do, I didn't record the Treasury as having spent the 500,000 on the growth safe. That money only becomes an expense later when we actually pay out a bounty or a reward. If I called it an expense now, I'd be double counting when that day comes. In the next walkthrough, I'll cover the trickier one. What happens to that 100,000 DFR once we actually create the pool and people start trading against it? Thanks for watching.